Stock market investors, welcome back to the channel. My name is Jason, and in today's episode, I want to discuss with you a very undervalued dividend play, in my opinion. In the recent market, stocks are running up crazy high, guys. All these valuations are getting bloated and more bloated. So we want to start to reconfigure our portfolio to get some better stocks that are at lower valuation, just in case we see a turnaround in the market late in the summer and a sell-off starts to happen. And the stock I'm talking about today is Pepsi. And I'm going to explain to you guys why I just opened up a position in Pepsi that I'm adding to my portfolio. I just added 50 shares of Pepsi, coming in around $131 per share. If you take a look at it, guys, year to date, they're down around 13%, underperforming the market. Over the last year, down over 21%. From peak to trough, we're down almost 30% for one of the bigger brands in this country, guys. If you want more stock market information, make sure you hit that like button and subscribe to the channel. So now let's get into these financials a little bit and kind of see what the heck is going on with Pepsi stock and whether or not it's a stock we want to keep buying, right? Earnings per share coming in around $6.80. PE ratio trailing 12 months coming in around 1926, right? So we're going to go over the statistics and just see what's going on. And as you can see, the market cap we're paying for this company is considerably lower than what it was back in March of 2024, almost $60 billion cheaper, right? And I love buying dividend stocks, guys, where the enterprise value is, significantly higher than the current market cap. The forward PE is coming in around 16. That is great as well. The S&P 500 is coming in around like 25, 26, somewhere in that range. Price to sales coming in around 2. I do like that as well, right? So we're going to take a look at, I always like to take a look at the company, see how they're doing, what the debt load looks like, right? So total cash are coming in around $8.5 billion. And these big companies always have monster debt loads, coming in around $48.5 billion. But the levered free cash flow is coming in around $8, so they're going to be able to handle that debt, in my opinion. Another thing I really like about this stock, the dividends coming in, over 4% right now, which is always great. Held by institutions coming in around 80%, right? And we always want to check the payout ratio. It is closing in on 80%, which is a little higher than I like it to be, but I do think that this, one of the best dividend stocks in the stock market, it's going to be fine. It's going to be absolutely fine. One of these dividend kings, guys. And if we take a look, enterprise value to EBITDA 1203, price to cash flow ratio coming in around 16, price to book a little bit higher than I like it, but the net margins and the gross margins, operating margins are all pretty good, in my opinion, for a company like Pepsi. Okay, here comes an article from Motley Fool. PepsiCo dividend yield just peaked 4.4% because the dividend king stock is too cheap to ignore. And I tend to agree with that. Down, like I said, almost around 30% over the past year, right? It's crazy, man. It boosted its quarterly payout to $1.42 per share. You're closing in on around $6. So if they were in any chance of them not paying this dividend or cutting the dividend, they wouldn't be, boosting the quarterly payout, right? They wouldn't do that. Forward payout coming in around 4.4%. I absolutely love that. And what you can do, which I like to do, is sell cash secured puts on dividend stocks, right? Because the dividend, like it's getting paid out, never ever changes, right? Unless they announce it. But if you get the stock lower, that means the dividend yield you're going to be getting is always higher. So if you want to do a cash secured put at $120, that's a great way to get a higher dividend yield and a better price on the stock, right? And they come up with some examples basing it on Microsoft. Obviously, Microsoft is, growing a lot more, right? But 10% raise per year is really, 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 really juicy, right? Here are some of the key data points, right? Coming in at $180 billion market cap, I love that. The gross margins at 54%, I really like that as well, right? And as you can see, Pepsi has been significantly underperforming the S&P 500, so there could be some room for growth here, right? Because this is a stable company, pays a really good dividend, and obviously a lot of these big Nasdaq stocks, the Magnificent Seven, they're running up crazy high, right? So we could get some value here and get some good returns on our investment, and we're going to collect over a 4% dividend along the way. Yeah, I mean, and I agree with this. A slowdown in consumer spending has impacted Pepsi, but as inflation starts to come down, I really think that this brand is going to start to make more money, chip away at that debt, and I agree that this valuation is really, really, really cheap. Coke's PE is above the 5-year median, whereas Pepsi is far below. However, Coke's forward PE is well below the median, so the stock is a very good value. So I think Coke and Pepsi are both very good values right now, in my opinion. As you can see, if you take a look at this chart, Pepsi and Coke have historically garnered similar valuations, but Pepsi is trading at a discount, whereas Coke is at a slight premium, right? If we take a look at this chart, we could see all these ratios that are showing how undervalued Pepsi is in comparison to Coke, right? The PE ratio forward 23, Pepsi is at a 16.34, guys. This chart says it all right here. It is a great value. And if you go in ChatGPT and type in what brands they own, you could see they own Pepsi, obviously, Mountain Dew, Sierra Mist is now Starry, Mug Root Beer. They also own Gatorade, Propel, AMP, and Rockstar Energy. They also own Aquafina, Pure Leaf Tea, and Lipton. And the juices they own Naked. That is one of my favorite brands. Tropicana, I love that, and Dole Juices. And they also have a big growing food segment where they own Lay's, Doritos, Cheetos, Ruffles, Tostitos, Fritos, Smart Food, Popcorn, Sun Chips. Sun Chips are my favorite. Those French onion boys are the bomb! And Munchies, right? And they own the Quaker Foods brands as well. Quaker Oats, Captain Crunch, Life Cereal, Rice-A-Roni. I mean, it's crazy, right? They own tons of different stuff. So they partnered up with Hims and Hers Hydration Line Partnership. I love that. Bear Snacks, dried fruit and vegetable chips, recent ventures and acquisitions, and SodaStream, right? So, in my opinion, guys, I like where Pepsi's at, right? Trading at a considerable premium to Coke, and I definitely think with that sell-off, right, Pepsi's debt to capital ratio at 72% compared to Coke at 65%. So that's probably why Coke is trading at a premium right now. But with that free cash flow that I showed you guys a little bit ago, we could see around $8 billion, and I think that's going to increase over the next 4 to 5 years, in my opinion. So we're going to be able to get that debt crushed up, and it's going to trade at a better valuation, in my opinion. So I really think that this is the time to start buying Pepsi, because usually that dividend is in that 3% range. It's pushing up towards 5%. If you could get it at $120 per share, guys, I love where Pepsi could be for your portfolio long term. If you could get it at, say, $120 per share, it's at $130 right now. So that's going to be closing in on a 5% dividend for years to come. And I think there's some serious share appreciation, man, coming our way. It's on sale, right? Current price at $130 per share, dividend at $5.69, 4.4%, like I said. But if we can get it a little bit cheaper, which we might be able to, right? So I love Pepsi. I think it's an absolute buy at these levels. With that recent sell-off, man, from peak to trough, guys, like I said, closing in on 30%, right? So I definitely think it's a stock we want to build out slowly. I wouldn't suggest, dropping 10 G's in Pepsi, but if you start a nice starter position, 10, 15, 25, 50 shares, and then work your way up towards 100, because then you could collect dividends and sell cover calls on top of that. That's going to make you more passive income, which I absolutely love. All right, stock market investors, Pepsi came across my desk at my lunch break, so I wanted to bring some information about this stock to you guys. If you think it's a buy, let me know in the comments down below, or you think it's a hard pass. I would love to know your opinion about Pepsi and this 4.4% dividend. I'm going to add some shares to my dividend section of my portfolio. I think it could be, we could get some share appreciation. I think Pepsi could get back in that range where it was trading at before. Look, I mean, $180 per share. That's $50 per share we could possibly get along with those dividends. I think it's a great buy. Don't forget to like and subscribe. Peace.